So the Fed made a cut of 50 basis points. And the real question is, what does that do to our market here in West Michigan? I'm Realtor Nick Belmore, and I specialize in helping buyers and sellers get into the right home for them here in West Michigan. And I'll tell you, a lot of people are really asking the question, what does this mean? How are these Fed rates going to affect our market? Is it going to go crazy? Are we going to see that mega bidding war? That's one of the biggest questions that's on people's mind as we start to go forward. Now, I'm going to tell you, I have seen this and I've heard realtors warn about this. It's always the same thing. You got to get in now because when the rates come down, things are going to explode. Bidding wars are going to be back. The same house is going to cost you $10,000, $15,000, $20,000 more dollars in a bidding war versus the few extra dollars you would have paid at the higher rate. Well, let me say this. I'm not so sure that that's going to be the case. And I'm going to tell you three major reasons why I do not think that this Fed rate is going to skyrocket our market here in West Michigan. Number one, the Fed rate cut simply doesn't offer enough savings. Now, one of the things that we know is the Fed rate is not directly tied to the mortgage rates, which means what? That a 0.5% cut in the Fed doesn't directly equal a 0.5% cut in the 30-year fixed rate. So with that being the case, let's just pretend. Let's pretend it did and they equaled out exactly. At $300,000 mortgage on a 30-year fixed rate, we might see at 6% an average payment of somewhere around $1,800 a month. With that 0.5% rate cut, if we saw the same loan and that loan was at 5.5% versus the 6, the monthly savings comes out somewhere between $100 and $115 a month. It's just simply not enough savings to cause people to take action and change their circumstance. Most people aren't ready to go out and spend, well, $250,000 or so in order to go ahead and save $110 a month when it comes to that mortgage payment. It's just not a big enough savings at this stage in my eyes to kick us up into that mad buyer frenzy that we had a few years ago. Number two, when it comes to the reasons that I don't think our market will go crazy from this Fed rate, homes, not just here in West Michigan, but across the entire country, have been at record highs. And I do believe that the ratio between what homes cost today and the income of the average family here in West Michigan is out of alignment. And I just think that at this stage, the buyers are seeing so many of these homes as grossly overvalued. And that puts them in the position where they're not ready to engage in a giant bidding war at a home that's already at the top of their price range, especially when they're only looking at a savings of maybe a couple $100 on a monthly basis. So until we can start to get homes back in alignment with what people make, and that could be a couple of different things. Maybe we have to build more homes and start to flood the market and bring those prices down. Obviously, what's the other side? As incomes start to rise, as that piece of inflation starts to catch up, and as everything throughout the economy begins to inflate, yeah, that will start to close the gap between what people are making and what it costs for a lot of these big ticket items in this type of economy. Last but not least, reason number three, why is the market not going to go crazy with bidding wars over this Fed rate cut? A big part of it starts to come into some of the NAR changes. And I do believe that these absolutely have been affecting bidding wars here in our area. And while we know that a lot of times the seller is absolutely still willing to pay your buyer agent commission for the buyers, we see that in bidding wars, that's one of the first things that the seller wants to push back onto the buyer. So if you're looking at a $300,000 home and you have to take on another $9,000 out of pocket as a buyer, it definitely is going to make you think twice before getting into a bidding war, and not just driving up the price, but also driving up that money out of pocket. Throughout the time, the 23 years I've been a realtor, there's absolutely two things that come to mind for them and are very important. Number one, their dollars out of pocket. number two, what is their monthly mortgage payment? Those are two of the big things. And if we start to drive up the dollars out of pocket for those buyers, no doubt the buyers will make the choice to simply not participate in those types of bidding wars and move to other options where they can keep that $9,000 in their pocket and put it back into the house as they move in. I do think the NAR change, while there's definitely a lot of effects, one of the big ones when it comes to sellers is it's absolutely a deterrent against some of the bidding wars that we've been seeing out there in the past. So ultimately, what does this mean for our market? Well, I will say this, we are going to keep cruising forward as we have. Notice we haven't seen a big decline in prices here in West Michigan. The demand and the supply have stayed steadily in line for the time being. Hopefully, as these rates come down, yes, it will give a little bit of a bump to demand. And at the same time, we've also seen over the past several months, supply steadily increased. Is it getting out of proportion? No, not at all. We're still in a very solid seller's market here in West Michigan. But no doubt that ratio between supply and demand has come into a more even pace than it's been in a long time. So that's a couple of the reasons why the Fed changes aren't going to go ahead and spark giant bidding wars. Again, I'm Realtor Nick Belmore, and if you got value out of this video, go ahead and like and subscribe so I can keep you updated about changes here in the market and what's happening when it comes to real estate and all things West Michigan.